Hey everybody. So, welcome to another installment of Short the Squeeze. So, what we do every week on Sundays is just go through the top rated short positions. I scour about 200 of them and then just go through what I think are the best. Out of all of them this week, I came up with eight. Two of the names you'll recognize from the past because they were double digit winners, and they just look like they're going to get squeezed more. As always, subscribe to the channel, turn on notifications because what we go over is extremely timely. And let's just really just jump right into it. We're going to try and keep this one short and sweet and to the point. So, DRIo. Okay, this is one that we were short before, and we did okay with this one. And I just want to point this out before I get into the chart. Now, understanding the short interest and when it increases and decreases is somewhat important. Okay, a week ago we had a short interest increase of 86%. Okay, that's pretty substantial increase, and you can see that how they piled on to this position and going higher. Now we have another increase. So as the stock's going higher, they're increasing their short position. Not exactly where you want to be when you're shorting a stock. Keep that in mind as we drill into this one. So what you're going to see here, let me get rid of this line to start. And we're going to get rid of, well, instead I cloned that. So we're going to get rid of that one. And we're going to get rid of this, and we're going to move this one right click on that, and we're just going to move that up here for right now. So what you see going on here, and this is DRIO, okay, you can see how we're just riding that, right? Look how you're just riding this 50-day, but look what you did here, and I think this is really important for you to understand. You closed above it, you broke below it, you opened at the low of the day. See how these bars are getting shorter and shorter? And look what you're doing. You're getting ready to break out here. Now, I think it's really important for you to understand that you have a little bit here. Okay, so you have a flagpole here. You have a high tight bull flag. Now you're waiting for the breakout. Your breakout, I should have just left that one there, but I want you to understand how I got there. So that's really where you're at. So roughly what you're looking for is $22. A $22 breakout. And let's go out to this a little bit further and squeeze this down so we can get more into the detail now. You have a downward trend line right here. This is DRIO, and you should be able to see this. See, you've broken this downward trend. You're riding this wave up through 22. Where's my resistance? There's very little until $26. I would not be surprised to see this squeeze to $26. That's the level I'm looking at, and I want to just bring this up. And I don't know where that DRIO went up here, but let's just put it back. Let's try that again. There we go. All right, let's just keep moving along. So you see how you're breaking the 200 week? This is the weekly chart. You broke the 200 week. Like, really get into this, right? You came down, you undercut. Everybody that's done that, the candlestick trade like a pro series that I did, understands and recognizes this pattern as a morning star. So, you know, they're pretty powerful patterns, and they're pretty easy to trigger. And usually it means that you're just going to go to the top of that bar. Well, we've encapsulated that bar, haven't we? We've encapsulated all this on a week. So this is not something you want to be increasing your short position on. And I think, you know, they're looking at the market being weak, which is very interesting because it's a weak market, and this thing opened at the low and closed at the high. Like, it just doesn't get more bullish than that. So I expect a continuation to that 26 level. And frankly, I don't even think there's a lot up there that's going to stop it. But first you have to get to 26. So DRIO is what I'd be looking at with a 22 pivot point. SWAV, for those that have been watching this for a while, this is our third installment. You know, we did this one the first week, and I think we were up. Let me see if I can drill into this and tell you. Yeah, from here, this was the breakout. So from that week, what are we up here on this one already? So if we looked at this one and we took it, you're up about 21%. I don't think this moves over. I think this is going a lot higher. And I'm just going to point out a couple key things here, and then we can get into some of the other stuff. So you have a trend line right here. Okay. Top of this, you broke here, and then the next day you tested it, you couldn't break it. And let's just get into this a little bit in greater detail. All right, so, and then you tried to break it here, couldn't break it, snapped below it. came close to the high, and now you're rolling a little bit, and you're just testing, you're just backfilling. You're not really doing anything crazy, right? But what's important to understand about this one, to me, is just the significant strength that you're seeing in the move. The move's just been outstanding, and it looks like it's going to continue to be. So let me just set that up perfectly there, and let's flip to the weekly real quick here. So you can see, and look, this is your upper trend line on the week, okay? You're flipping it. And people that have been with me for a little bit and following these, I'm a big proponent of this. When you flip these upper channels, right, and you, especially on a weekly basis, you're setting up for a really huge push. If you were just to count from here down to here to determine, you could be looking at a 50 or 60 point move on this stock over time. So Shockwave Medical, I don't know what they, I don't know what they do. I'm more of a technical trader. I can get into the fundamentals. I just choose not to. This is setting up to go substantially higher, and I would watch this one. Really, your movement here is hopefully it comes back down and you could find an entry. If not, you're going to have to do something simplistic like get above the, the price rejection of that wick and go there, and you'd be looking at roughly 165.50 is what you'd be looking for a pivot point on this. But the way that this is shaping up and this kind of tape, it's shaping up to go a lot higher. So CVNA, Carvania, which I'm sure people are familiar with, and I just want to show this chart so you can see this on the weekly. So here you are on the weekly, right? And let's just shrink this down a little bit, and it's come out in the middle. So you can see how you've just been riding for months. You broke here, and look at when you broke out here. Look what you've done since you've broken out. Support and resistance has flipped on the weekly. So look at how you're just holding this 242 line, okay? It's just not breaking. There's a buyer there, whomever it is. And now you've had this little wedge here on the weekly, and you've broken above it, and you're above the 21 week very solidly, which is exactly what you want to see. Now, if we drill down into the daily on this one, look at this volume. Look at what's going on here. The interest isn't increasing as much, but I have 12 and a half days to cover here on 17 million shares. Like that's no small feat. And you can see when this thing gets squeezed, just to put this in perspective, see this bar here? That's a squeeze. This bar here, that's a squeeze. Look at these moves. Like these, when this thing moves, it moves. And I think you're setting up for one here. So I would recommend putting this on your radar. I mean, you can see here, okay, this is a day. You're up 30%. Okay, and let's go to look at another one. One of these is earnings. I'm pretty sure it's the September one. Right? And you're up 36%. I mean, these are day moves. So this is setting up to go higher here. When you look at this pattern right now, you don't really see a lot, but I kind of do, and I'm going to walk into it just a little bit so you can understand this, because I think this is important. And let me just put this back up in here so I don't have to go searching for it, so everyone remembers which one we're reviewing. This is number 3 out of 8. So you have a breakout here above the 292 level, which is exactly what we're looking for, right? Okay. That's our level that we really want to see it get above before we would enter a trade. But look at this going on here. See how you have a little falling wedge right there, right? And that's why it's so important to understand this and look at different time frames. But you see this little wedge right here? So yeah, everyone knows what we do with these lines. You just, at this point, if you've been following me, you just click on them and you just put them, wherever they fall, as long as they're still touching in 2 places. You always clone the lines because you want the same trajectory or you don't have a true channel. So you're looking for a breakout here. Now, 2 things are going to happen when this breaks out, right? You're going to flip this support line, resistance to support, and you're going to break out of a falling wedge, okay? That's what's going to happen. And again, I do scour through about 200 something charts just to find these ideas. So usually they're pretty well thought out. You might want to just kind of follow along with them, even if you throw them into a watch list at first. But you can see where I'm going with this. You stopped at the 8, you closed at the 5, and now you're going to flip the 5 at the same time you break this resistance line and break the falling wedge. So you're going to have a lot of action on this when this goes. When this moves off of here, you should see a powerful move upward. So definitely keep this one in mind. It can go, and when it does, it has these kinds of moves that are just, they're staggering. Again, I'm looking for more of the short term move here, but I just want to point this one out because I was absolutely floored by this. So VICI, this is number 4 of the 8 list, and I do think this continues to get squeezed. And what you're seeing here is you're starting to see the volume increase, okay, on the daily. But let's just go through this. This is a stock that's earning 4%, over 4% a year in dividend yield. VICI owns the Caesars casinos. They're the real estate of Caesars. They spun it off. And you have 11 and a half days to cover a dividend stock. People that own a dividend stock do not sell a dividend stock, and they sure as heck don't get shaken out of their dividend stock because it goes lower. They buy more of it. As a matter of fact, yeah, I understand this is the pandemic and this is when it sold off. But what I'm getting at here is not all of the stocks from the pandemic went from that break have taken out new highs. People buy yield, especially when the 10-year is where it is. You have people out there that just says, yeah, just give me the 4%. And if the stock goes up $2, $3, that's fine. If this comes down and drops 10%, they're going to buy it because their yield is going to increase. So I'm not really sure what the argument is here, unless they don't think that they can make their debt payments or things like that. But with the dividend yield out there, it's showing that they're liquid. They're not cutting the dividend. So I don't really understand the bear argument to this. And if somebody has it, please comment and let me know what it is, because I just see a very short squeeze position over a long period of time. Breaking out of this 28.78 level. Looks like we got 2 lines here. Let's get rid of one of these up here. 28.74 level. When you broke out of here on the weekly, you just never look back. And these are the kinds of moves that I love to see. You break out, you fail, you come back down. Here's your morning star pattern, right? Remember that from the candlesticks we talked about? Here's your morning star pattern. It rejects right off of this line, goes higher, closes above it. I mean, this is a perfect can slim move where, when you're here, you buy a percentage. Let's say you're at 100% of what your trade should be. When you break through the second time, he would always state to increase, because when you go through the second time, the majority of the time it continues to go. And I really think that that's what's going to happen here. Now, where does this go? Well, that's a really good question, because you have a dividend stock, right? You don't have a high beta name here. So you're not really going to knock the cover off the ball. But what you're going to do is you're going to constantly increase. And I'm just going to give you a rough estimate on where I think you can get to. So just from here, I think you can get to $35, $36 fairly quickly. It's 10%. And I do think that if it gets squeezed, it could go a little faster. I mean, this move's pretty staggering. But really what you want to see is this closed at 31.87 and this closed at 31.88. So, get me above that 32 level, and I think you have about 4 points there. And quite frankly, all you would have to use is just the 5-day as your stop. And the 5 days, not even 31.36. So, I mean, it's not even $1 stop. It's like 50 cents, 75 cents with slippage stop to make about $4. So, again, I would do 4 to 1 all day long. DKS, Dick's Sporting Goods, like, I get the idea behind the short. Like, I do. I understand it. Let me just go through this real quick so people can see this. This is the monthly. Obviously, this is when we sold off, where no one was ever going to buy sporting goods ever again, to where everybody loves sporting goods. Okay, so that's just the rough idea of what we're doing on the monthly. But I just want to point this pattern out, and you'll see that I'm very big on pattern recognition. And let's just go through this really quickly. They're decreasing the position, right? They're pretty fast too. I mean, almost 2 million shares have been covered already as it dropped down, which leads me to believe that they're going to continue to do that. I have 6 days left on 17% to cover. And I get the short side of this, where the argument's going to be, okay, well, they have all these leases that they have to pay. No one's going into stores ever again. That whole argument. Okay, I got it. But with that said, what's going on here? We have a trend line right here that we're respecting. We hit it, and now we're bouncing off of it, and we closed at the high. If you really drill into this bar, And we're going to do that so that people can see it. And we're going to get rid of these indicators. See how you opened and closed at the all-time high of this bar? Okay, that's not really a doji. That's considered what we would call a dragonfly bar. And from those, again, that watched that candlestick video, you're familiar with this pattern. So you basically have this dragonfly inside a morning star. Okay, and so when I break above this, which I will break above this, most likely Monday, this will happen. When I get a higher high here, that's your trigger, right? That's what you're looking for. And if you take out this low, which the low is 80.42, so if you break 80.42, you need to get out of it. You're at 82 and let's just get 82 and 3/4 is what you're looking for it to trigger. So you're roughly looking at a $2 stop, a little more than a $2 stop. And you know, where can this go? Well, just on the trend in and of itself, I can get up to here to $90, and that's just to start. You know, the fact that this has broken out here, right? This was our breakout right here. And now we've come back down and tested. When we break out again, it's usually a much more powerful move. So I do think this is very actionable. And I'd be looking at that 82 3/4 level. And let me just throw those back in so you can see them. Shrink this down. And then we'll come here and just blow that up a little bit so you can get a better understanding of it on a longer time frame. But I do think this is setting up to get into the nines. I absolutely think it's going to be a $90 stock. It's just got that. It's got that feel to it. We'll do the undercut one more time. And people that have followed me for a while, you know this little pattern, right? I mean, let me just show this other one too. I'm just trying not to show everything, just the most important things. But you see how you broke this line and then bounced back over it? That's a double bottom that was formed there as well. So, you know, there's a lot more to some of these charts than I'm throwing out there at once. But that bounce is pretty good. Get me above that. Get me above these moving averages, the 5-day, you know, the 21-day, and I think you'll continue to see the move. You know, this is one I've been charting for some time, and I really like the idea. This camping world, I guess people don't feel that you're going to buy, you know, campers. On the daily, we're just not there yet, but it could be there by the end of the week. So what you've done is you've gone to the top of this trend line and you've rejected it and you've come back down. So this is not perfectly ready for prime time, but I think it's getting there. And I think you're going to have to come in a little bit, maybe for a week. And you might come back down to this 40 level. If you come back down to this level, like this 40 level, 41.5, 41.25, you need to take a look at it because you really shouldn't fully go below this. You're not going to, I doubt highly you're going to go below this 39.89 level, right? And right here, you have the exact antithesis pattern that we just saw on the weekly on DIX. Right here on this, we have what's called a gravestone. Some people say that that is how you determine a bottom. I don't really agree with that. I look at this as price rejection and needs to be viewed as price rejection until proved differently. So I expect this to break, come in, and possibly get to that 41 level. At that point, I would become very interested to see if we could then curl back up and go higher. Over a period of time, this is setting up enormously. And let me just get into this. So this is the monthly, okay? And let's just go through a couple things here. This is your all-time high, 47.35, something like that. What are we at? 47.60 is the all-time high. You're setting up to break that. When you break this on a monthly, and this is CWH. So when you break this on a monthly, and I have this deep of a base, this can go. I mean, this could really have a huge move associated with it, and it would take time. But you could see it breaking out. And if you count that on the monthly, and you're looking out a year, it can go a lot higher. There's a lot of resistance points in here, and you're not perfectly ready for prime time, but you can see this little line right here and how we're holding it. We just have to see what happens. The fact that we closed at the low is not great, right? So my hope is that we get the flush, then we bounce around, maybe form a little pendant, and then bounce right back up, and that gives us a level. But put this on your radar. I think it's worth taking a look at, and I think it's worth having it out there. I'd throw all these in a watch list, and I would seriously consider watching them and looking at them daily or at least every other day. I mean, I look at them hourly, but at a minimum. But MDGL, you have a classic rejection right back to support after an overgap. So in other words, an overgap is you get great news. Everyone thinks the stock's going to run, and it gapped up to here, right? And then it just fills all the way back down and just crushes everybody because, you know, everyone thought this is it. It's really going to go. And all that happened here is where the shorts piled in more, right? I mean, that's really what happened there. You got to a point where you just had an enormous short position come in. And let's look at this on the weekly. This is what I was very interested in with this one. And look at this, 136.81 on the weekly. Okay. And let's just go through. This stock's been a lot higher, but look at this. Get me above that 136 3/4, especially if you close there on the weekly. I'd be very interested in this. And this is a 200-week moving average, a 50-week moving average, and a 21-week moving average. Like they're not going to turn. That's not going to just stop. And if you overlay that with what we see going on here, this is setting up again. This was a nasty day, and you're going to have another nasty day because of where we closed on the low. Let it flush out, and then look for it to hold a certain area. I don't know where that area is yet. If I had to pick, I'd probably say the 132 area. Like, I'd be very surprised if you break, you know, this. Yeah, that's 132. So you can see how you've respected it 1, 2, 3 times, right? And even here, you see how it was resistance, and then how that resistance line flipped to support, right? Boom, breaks out. Everyone's like, this is it. And then it's not it. I mean, like, we've all been there, right? But to form this, and it's not a true evening star pattern, but like rolling back down, realistically, this is going to test the low of this bar. It gets me to that 132 level. At that area, I may take a look at it and become very interested in it. It has a lot of long-term potential there. PETS, I really like this trade. Let me just drop this down here and let's blow this one up. This is the last one that we're going to go over today. I just wanted to give 8 ideas that I think really have potential. So this is PETS on the weekly, and let's just get into really what's going on here. Really drill into this one. So it's important to look at the data on this one. So, and some of them it's more important to get into the data, but this in particular. So I have 7 days shorting, 26% of the float. I'm increasing 19, we'll call it 20% to make the math simple, right? So you added roughly 1 million shares, okay? I added 1 million shares and people are shorting it at the low. That's probably, you know, I get it when you're shorting it here when it spiked. I get it. I understand, right? I understand why when PetMed did this, people put the short on. I got it. What I don't get is why you would increase your short position here. Now, with that said, if you get really technical, which I am, okay, this is your stop, right? You undercut it, now you've gotten above it, and on top of that, okay, you have a Morningstar position perfect right here on this bar. So getting above this level, which is 29.57, so it's called 29 3/4, is going to take us to that 30 3/4 and get us in at a decent price. And that's really what we're looking for. And a break of the lower low of that is 28.5. That's really your stop. I mean, you're talking about $1 risk here to get in this, and it can have another powerful move when this thing gets squeezed. So I would definitely put this one on your radar as well. I do like the idea. I don't know if you're going to get one of these kinds of short squeezes or not, but the fact that you've broken it, undercut it, and then bounced back above is exactly what you're looking for out of a double bottom, right? I mean, I'm increasing my short position and the stock's going up, and I have some of the strongest volume I've had all year. Third highest volume. Let's just go back and take a look. Yeah, I mean, you're at the 3rd highest volume that you've had in a year on this. That's crazy. And, people are shorting into that. That's not really where they want to be. So that's it. That's the 8 ideas. As always, please subscribe to the channel, click notifications, because what we go over is extremely timely. And everybody enjoy your Sunday.